Microsoft versus Tesla. Both are powerhouse companies, but if you had to pick just one for your portfolio after the recent sell-off, which would you go for? After I walk you through both stocks, you'll see why we've got a clear winner in this face-off between Gates and Musk. Let's start by setting the stage. Microsoft, best known for its Windows operating system and Microsoft Office suite, has been dominating the stock market since its IPO in the 80s. On the other hand, Tesla, the electric automotive giant, has a more recent but equally impressive history as a company. But how do these two stack up when it comes to stock performance? Let's break it down. First up, let's talk about their origins. Microsoft, founded in 1975, is the elder statesman here, going public in 1986 with an IPO that generated $61 million and was dubbed the IPO of the year by many analysts. Tesla's story begins much later. Founded in 2003 by Martin Eberhard and Mark Tarpenning, it wasn't until 2004 that Elon Musk entered the picture, contributing $6.5 million in the initial funding and becoming chairman of the board. Tesla's IPO came in 2010, offering shares at $17 each and raising a massive $226 million. In terms of their current standing, Microsoft boasts the second largest market cap in the world at a staggering $3.093 trillion, just below Apple and above Nvidia. Tesla, while still impressive, comes in at 12th with a market cap of $683.6 billion. It's a testament to the crazy world we live in when billions are considered small. Both companies have recently ventured into the AI space, investing billions of dollars. But how does all of this translate into their stock performance? Let's compare both since 2010 when Tesla had its IPO. Starting with Tesla, it's been a wild ride. Like most IPOs, Tesla had a slow start, bouncing between $1 and $3 per share for the first 3 years. Tesla saw its first significant uptrend between 2013 and 2017, climbing around 900% to $26 per share. Then came a 2-year period of large swings between $26 and $12 before the next major uptrend in 2019, which saw the stock soar to its current all-time high at $415 per share in 2021, a mind-blowing 1,500% climb. But here's the thing, neither of these uptrends were smooth. They were bumpy with deep declines, not what investors typically look for. Since setting its all-time high at $415 in 2021, Tesla's stock declined 75% to around $102 per share in January 2023, before rising to $300 in July 2023. It's been consolidating between these levels ever since. What does this tell us about Tesla's stock? In a word, volatile. It rises and declines quickly, providing an emotional roller coaster for investors and traders. HODL is definitely a word that comes to mind here. Now, let's shift gears to Microsoft. Since Tesla's IPO in 2010, Microsoft has been nothing short of a gem. It climbed almost 1,500% from around $22 in 2010 to a high of $350 in 2021. But here's the crucial difference. While Tesla climbed 1,500% in just 2 years between 2019 and 2021, Microsoft took 11 years to achieve the same percentage gain. This stark contrast in behavior showcases the fundamental difference between these two stocks. Microsoft is the steady Eddie, reliable and consistent. Tesla is more like an erratic little brother that needs to calm down and settle. Both stocks have a daily volume of around 20 million, but they likely attract very different types of investors and traders. Tesla likely appeals more to the short-term trader looking for a quick gain, while Microsoft attracts serious investors looking to hold, compound, and receive dividends. Okay, let's fast forward to recent events. Microsoft went into a 2-year consolidation between November 2021 and October 2023 before breaking out and setting record highs, climbing 27% from $366 to $468, the current all-time high in July of this year. Then came the July and August sell-off, which saw Microsoft fall 18%, even including a positive earnings window. Looking at the daily time frame, the peak of the decline took Microsoft below the daily 200 simple moving average, but this was temporary. Since then, it's climbed 8% and is back above the daily 200 simple moving average. Now, a quick history lesson about the daily 200 SMA. Back in the day, old school traders drew charts by hand. This was a time-consuming task, so they were incredibly selective with the information they included. The 200 SMA was one of the few standard indicators they used, as it proved to be a reliable indicator of the long-term trend. The rule was simple. Above the daily 200 SMA, the bias was bullish and they took long positions. Below it, the bias was bearish and they took short positions. They never went against this bias. Institutions and trend followers like us still use this logic today. If it ain't broke, don't fix it. Looking at Tesla, we can see the recent 16% climb has also taken its stock price back above the daily 200 SMA. But here's the crucial difference. Tesla is stuck in a sideways market, while Microsoft has been in a trend since November 2022, when the bull market started following the declines of 2022. So, based on everything we've covered, which boils down to Microsoft being a well-behaved big brother with a steady and very profitable performance history that's currently trending up, compared to an erratic little brother in Tesla, which can hand out profit in booms, but can also swing violently to the downside and is currently stuck deep in consolidation. The better stock to buy right now based on current trend structure post the sell-off in July and August has to be Microsoft. Now, when to buy is an important question. Aggressive investors will start coming in now, with Microsoft being above the daily 200 SMA. The advantage here is more profit when it breaks out and starts setting record highs, trending towards $500 and beyond. The downside is that it may struggle to break through the all-time high, which could mean a lengthy period with no significant growth and your risk tied up. The more conservative investor will wait for the all-time high to be cleared and the next uptrend to be confirmed before taking a position. Given Microsoft's track record, don't be surprised if it works its way towards $1,000 per share over the next 12 to 24 months, assuming the market as a whole keeps pushing up. The analysis method we use today is called the 4-phase sequence method, or the 4PS method for short. It's a systematic approach we created to identify and catch potentially profitable stock investments at the very start of their uptrend. It will help you make more informed decisions about stocks like Microsoft and Tesla rather than buying on a whim. Okay, let's break it down. Phase 1, identify a stock with a proven performance history. As we've seen, both Microsoft and Tesla have strong histories, but Microsoft is more consistent. Phase 2, wait for a prolonged consolidation or base to form. Microsoft has recently broken out of such a base, while Tesla is still in one. Phase 3, confirm the breakout from that base. Microsoft has already done this, while we're still waiting on Tesla. Phase 4, enter the stock at the start of the next major uptrend. This is where Microsoft currently stands, making it the more attractive option according to the 4PS method. Remember, it doesn't matter if you think that Microsoft is undervalued or overvalued. What matters is that the stock is going up. To take advantage of the trend, you must take a position. And if it fails, which is always a possibility, you have risk and exit management to protect you. But the question to ask yourself is, what if it doesn't fail? If you're interested in buying Microsoft and see its long-term potential, click here to watch the video where I cover it in more detail and why I've been buying more since it broke above $400 per share.